Well, it's been another wild week for the Los Angeles real estate market. Prices have fallen again, though you really have to dig into the data and read the tea leaves to get a sense of where prices are headed from here. So let's do it. My name's John Schwartz. I'm a realtor with House Hack Los Angeles, a boutique agency that doesn't just help you buy a home, we help you hack the market so you can make the best investment of your life. And this is the Los Angeles Real Estate Roundup for September 3rd, 2024. And we'll start off by looking at mortgage rates. Right now we're looking at the past 12 months of the average 30-year fixed rate mortgage rate, and we are still in very low territory at 6.4%. Now the Fed is expected to cut rates further in September. Rates are already falling in expectation of that. The question is, how much further will rates fall between now and the official Fed rate cut? Obviously, subscribe here to find out. And now let's get into our Los Angeles numbers. Right now we're looking at Redfin's latest weekly print for the Los Angeles metro area. And as you can see, median sale price has been falling for 6 straight weeks. We're now down to $900,000 for the median sale price of a home in Los Angeles. That's the first time we've gotten back down to $900,000 since mid-April. Does this mean home prices in Los Angeles are crashing? No, as you can see, home prices tend to go down this time of year. Well, I guess not always this time of year, sometimes later in the year. But what I'm trying to show you is the cyclicality of the housing market in Los Angeles and any housing market in America. Prices peak sometime in the summer. This year was around here. And then prices begin to fall off in the fall. Now, I think the question we're trying to answer is, are prices going to continue falling off like so, or could we have something like we saw last year, which is a fall rally with prices leveling off toward the end of the year? Well, let's look at some more data and see what we can find out. If you're looking at the median price at which a new home is listed, you're probably anticipating more price drops. That's because the median new list price for a home in Los Angeles has been jaggedly falling for about 9 weeks. And we're now at $923,820 for the median listing price of a new home in Los Angeles. And that is the lowest point we've seen since mid-March. So prices are falling and listing agents are feeling it. And as a result, they're bringing homes to market at a lower price point. Let's take a look at inventory. Right now, we're looking at new listing data. And as you can see in absolute numbers, we fell from last week. Last week, we had 1,406 new listings on the Los Angeles market. This week, we're down to 1,385 new listings. But the year-over-year growth from last year expanded from 12.3% over last year to 13.7% over last year. And if we come down to the year-over-year graph, you can see that for most of the year, we were right around this 13.5% range. And that's growth over last year, meaning each week, 13.5% more homes came to market than the same week last year. Meanwhile, homes are coming off the market by being sold. Let's take a look at that. Homes sold is tracking dead on with last year. We sold 1,021 homes this week, and this week last year we sold 1,011 homes. Now, if more homes are coming to market and the same number of homes are getting sold, that pushes up inventory. And finally, we get to active inventory, which also fell from last year, both in absolute and percentage numbers, from 15,672 active listings on the Los Angeles market last week to 15,533 active listings on the Los Angeles market this week. That represents a 22.71% growth over last year. If we scroll down to the year-over-year graph, we can see that we peaked in inventory relative to last year several weeks ago. However, we're still healthily above the 20% mark. In any market in which you can say you have 20% more inventory than last year is a pretty decent market. We put supply and demand together to get our metric weeks of supply, and this week we saw a slight uptick from 15.3 weeks of supply to 15.5 weeks of supply. And we should note that we are, again, exactly where we were in 2022, the year that home prices fell off a cliff. Of course, now is a completely different story. In 2022, the story was that rates had just doubled. In 2024, the story is that rates are falling. So even though inventory is where it was in 2022, we shouldn't expect this trend to continue. I would anticipate inventory leveling off, or perhaps even falling a bit, whereas in 2022, inventory peaked all the way up here at 19.5 weeks of supply on the market. Let's pop over to our vanity metrics. These aren't vanity metrics in the traditional sense, but I call them that because they're somewhat ancillary to the core metrics, but they tell us a lot about the market. Off market in 2 weeks, this number has been growing for 3 weeks straight. This is the percentage of homes that exit the market within 2 weeks. Right now, we're at 27.3%. This indicates a market that's moving faster However, price drops have climbed back to 4.6%, matching the all-time high of the year. This means 4.6% of homes that are listed have had a price drop, and this is an indication of a market that perhaps isn't losing speed, but is losing value. I talk about this a bunch, but this is what I consider a bifurcated market in Los Angeles. You have desirable homes that hit the market, and because inventory is so tight, they're gone quick. At the same time, because inventory is growing, homes that don't satisfy, that aren't move-in ready, that aren't quite perfect, sit. And when they sit, they need price cuts. And finally, let's check in with the average sale to list ratio. This is the ratio of sale price to final list price. And when we were talking 2 weeks ago, I noted this sharp downturn that we've been experiencing for a couple weeks and wondered if maybe the sharp downturn would continue. Well, alas, it didn't. As you can see, we flattened out and have not even come close to reaching a 100% sale to list ratio. Right now, the sale to list ratio in Los Angeles is 100.6%. Will we reach a 100% sale to list ratio or even fall under it this year? That's possible. I mean, you can see this trajectory continuing and sliding just under the 100% mark by year's end. If you're a home buyer in Los Angeles, this is the kind of metric you want to pay attention to. Pay attention to it here by subscribing and catching next week's Los Angeles Real Estate Roundup.